Hi, this is Mike Maloney from Up on the Ranch, and in today's video, John Paulson says that now is the opportune time to buy gold. A couple of authors suggest that the U.S. Treasury should allow gold's price to go from its statutory rate of $42.22 up to market rates to avoid the debt ceiling debacle. And the Bureau of Labor Statistics has revised the inflation estimates for the last 6 months of last year all up. That and more in this video. So the first article, John Paulson, is now is an opportune time to buy gold. And as I go through this article, he says the dollar's devaluation due to inflation and geopolitical tensions will drive gold up considerably this year, and that this is over the next 3 to 5 years, that he thinks that gold is going to be an excellent play, and that's obviously what I think, that we're going into a recession, that the U.S. government overshot its response to the COVID pandemic, and that the amount of printing that the U.S. central bank has done in order to stimulate the economy is going to be a cause for further inflation. I agree. Prices haven't risen yet enough to soak up all of the excess currency that was created. Now, most of that currency flowed into the stock markets and so on. As it comes out, as people start cashing in because they're getting afraid of a recession, that means that it goes into their checking accounts and then they buy other stuff with it. So I think we are going to see inflation for some time. So as proof of this, central banks have bought up a record amount of gold in the past year, and I'm going to show you that in a few minutes because this article suggests another article at the end, and that's what it's about. Gold will go up and the dollar will go down, he says, so you're better off keeping your investment reserves in gold at this point. If you possess physical gold, you don't face geopolitical risks, and that's what I like, is physical gold. I do have some silver explorers and some other mining stocks, but it's a very small sort of gambling portion of my portfolio. We're at the beginning of trends that are going to increase demand for gold, and inflation and geopolitical tensions will determine the rate at which gold increases. And so he sees that this is going to be an excellent investment for the next 3, 5, and even 10-year basis. He says we're going to enter a recession, and that all of the currency that the Federal Reserve has created over the past few years, it's like having a party. There is a big hangover coming. Now, the central banks buying the most gold since 1967. Well, that was when we were on the Bretton Woods system and when they were all using gold as their base currency. That was the monetary base, was gold back then, the foundation of the monetary base. And so this is, we've talked about this in several videos, but this is huge. If the central banks are buying, that's sort of a cue that it's probably a good time for the public to be buying. This article, Fixing the Debt Ceiling Crisis Via Gold, suggests that we should allow the gold at the Treasury, to be revalued. But the gold isn't at the Treasury. The gold has all been pledged to the Federal Reserve, and it is what backs the Federal Reserve notes. So they really can't do this the way that the authors are suggesting. But if you go to the H.4.1 release from the Federal Reserve, and you go down to the bottom, you can see collateral held against Federal Reserve notes. And there is gold certificate account of $11,037 million worth of gold. But that is at the statutory rate of $42.22. And so they would need to just revalue it. However, it would be that only... It doesn't even give them $500 billion. It gives them 480 billion or 460 billion if they revalue it to today's prices. And we're going to run a deficit that's going to be closer to 2 trillion than it is to $500 billion. And so it's not going to work. We would just run up against the debt ceiling again. You know, Powell says that the only way out of this is for them to raise the debt ceiling. The debt ceiling is just a bad joke that they keep on playing on us every 4 years. And to my mind, it's pretty much something to be ignored. You know, they make all of these threats, and the first thing they do is shut down any services that make the public hurt. And then they start robbing other government accounts to keep on spending at the rate that they're spending for all of the things that they consider necessary. But they'll make the public hurt to as much as possible to try and win this thing and to try and force the debt ceiling to go up and try and force one party to pass this budget. Anyway, so what would be a better idea is to just fully back all of the Federal Reserve notes. So you transfer all of these, the other collateral, all of the Treasury bonds and agency debt over to the other accounts at the Fed, and then they can create digital dollars and give them to the Treasury, and they use gold to back the paper notes. If they did that, it would be about $8,600 per ounce. So they would just have to declare a new price for gold and make dollars redeemable for gold, which basically they are right now. You can redeem them for gold through my company, GoldSilver.com. Mike Shedlock, Mish, he just did some good analysis on the Bureau of Labor Statistics revising the revisions of the CPI. And for the last 6 months of last year, it was all revised up. But there's this pattern that you can recognize. They actually revise it down for most of the months in the first half of the year, and then they revise it up in the last half of the year, and then down in the first half of the year, and then up in the last half of the year. So this is an interesting pattern that keeps on repeating. But, you know, if you think stuff is more expensive than the Bureau of Labor Statistics and the government is telling us it is, you were right, they were wrong. And so moving on, Adam Hamilton is somebody that I've been following for many, many years. And in this article that he just wrote, he basically talks about the big pullback that we had earlier this month in gold and suggests that this is the buying opportunity. So does Paulson. He's saying it's the buying opportunity. And at the end of it, he says the bottom line is gold just suffered a sharp pullback, which is healthy. Markets naturally flow and ebb, taking 2 steps forward and 1 step back. And so this is a counter-trend sell-off that is an opportunity. It's a good time to be buying. And here is the sell-off that he's referring to. And it looks like the sell-off is over with. It has found support. And there is a lot happening in the economy. You know, in writing my book, the stuff that they have done to the global economy is so scary that, I mean, the more research that I did on this, I started to actually become paranoid and started getting ready for something really, really bad. That's the reason for the ranch, basically. But the more research I did into it, the more worried I became over the global economy. I think that we are in some trouble. It will probably take longer to play out. But what happens with these things is they start out slowly, and then they start going faster and faster, and then a whole lot happens very, very quickly at the end. If you remember the global financial crisis of 2008, you know, Ben Bernanke was saying, don't worry, everything is fine. There's no crisis brewing. You know, there is no recession, stuff like this. And then they're on TV saying that they had to bail out all of these banks and so on, and that, you know, Lehman Brothers is going under. So anyway, you know, please visit GoldSilver.com. Take a look at the news on our website, and you can keep up with all of this. I want to thank everybody for watching. Please like and subscribe if you got anything out of this, and we'll see you next time. Thank you.